Good afternoon and welcome to this event. My name is Supriya Syal and I am the Deputy Commissioner of Research, Policy and Education at the Financial Consumer Agency of Canada. It's my pleasure to be here today where we will be discussing accelerated change in retail consumer behaviors and its impacts on the payment industry. I am joined today by Christie Duncan, the founder and CEO of Women in Payments, who was named in the Women in FinTech Power list of UK's Innovate Finance and Lloyds Bank in 2017, 2018, and 2019. Sue Lewis, who is a leading thinker in financial consumer protection, a renowned consumer advocate, and previously chaired the Financial Services Consumer Panel of the UK Financial Conduct Authority, and Richard Rémillard, the president of Rémillard Consulting Group, and who, among other things, currently serves as a director with the National Crowdfunding and FinTech Association of Canada. So it's quite the lineup, and I hope you're looking forward to a bright and engaging discussion as much as I am. We're quite hopeful that this will be a two-way dialogue with the audience as well. So if you have a comment or a question, please type it in the chat function and I will try my best to represent. So because I am the moderator and the overlord, I get to go first. And I will start by briefly introducing the Financial Consumer Agency of Canada and some of our work in payments. So we are an agency of the federal government of Canada, and our role is to protect financial consumers. We do this in two principal ways. One is by regulating the market conduct of banks and other federally regulated financial entities. And the second is by educating consumers and helping them make better financial decisions. In my role, I run this latter business line that aims to understand and help the Canadian financial consumer. Part of this body of work is present focused in that we target our efforts at working with our stakeholders and our partners to increase financial literacy. So how can we use the tools that we have available to us, research, experimentation, policy, to help people acquire the skills and the confidence and, importantly, the behaviors to meaningfully improve their financial lives? And part of it is future focused, which is how can we contemplate what the consumer experience will be and what protections and enablers will need to be put in place in response to emerging changes in the financial landscape, such as innovations in payments. A great example, of course, is open banking. Earlier this year, we published on our website our submission to the Canadian government's advisory committee on open banking. And the overall gist is that we are very supportive of open banking because of the significant value it has the potential to bring to consumers through greater competition and real choice. Of course, we want to make sure that consumers don't lose the hard-won protections that have been put in place to prevent harm from coming to them. And that, I'll say, is the envelope of our perspective on all innovation, including that in payments. Innovation is inherently about questioning the status quo to make things better, so it shouldn't make it worse for some. Now to the topic more specifically in hand, perhaps, retail payments and changing consumer behaviors. One of our research streams at the FCAC looks at changes in consumer behaviors, and right now this inquiry is of course linked to the pandemic, as all things are. So we ran a monthly survey looking at Canadians' use of bank products and services, which ran from July of 2020 to April of this year. And the results, unsurprisingly, you will imagine, showed us that more consumers have moved to contactless payments. So 53% are saying they use TAP more often, 36% are saying they use credit cards more often, 46% are using e-transfers more often, and as a corollary, 67% are using cash less often. So overall, people are using card-based and online payment methods. More people are using card-based and online payment methods. Fewer people are using cash. These data and others are available on our COVID-19 dashboard on our website. Another trend that we're currently examining is the use of buy now, pay later plans and how and when consumers choose to use them. Our analyses indicate that the user base of these plans is younger, about 53%, about half of them are under 44 years of age. The largest group being people between the ages of 35 and 44. And about a third of our consumers who are under 35 years of age have used 4 or more buy now, pay later purchases. Common purchases include, furniture, appliances, electronics, clothing, things like that. But people are also buying small ticket items like household essentials or groceries, movies, music, stuff like that. Still, though, the majority, about 75% of buy now, pay later payments are purchases that were for $200 or more. A common wisdom, of course, would indicate that the reasons for people using such plans are that, their inability to afford the entire purchase right now, which is true. But interestingly, an equal percentage of consumers report using such plans to avoid paying interest fees or to help with budgeting. And a substantive number do it, about 25%, they do it just because it was advertised or they wanted to try it out. Of course, as a regulator, we're also interested in how this might impact consumers, and the risks, as you probably know, include overborrowing, potential negative impact on credit scores, the lack of recourse through a complaints handling procedure, which are all drawbacks that are poorly understood by consumers but can have wide-reaching consequences on individuals who are making these decisions. So, for instance, we know that about one in 5 people say that they spent more using buy now, pay later services than they otherwise would have if they'd used a different payment method. Similarly, of the people who said they had made a complaint to resolve a dispute, 100% said that the process was very unclear and that they were unable to resolve their dispute. Which brings me to the core line of inquiry that I hope we will be able to find some time to discuss on our panel today, and that is, how do we promote and foster and indeed accelerate innovation while also not taking away the protections that provide safety nets and guardrails for consumers? Do innovation and regulation have to be at cross purposes? I will argue that they don't, but I suspect my fellow panelists will have something to say about it. And with that, I will invite the stagehand to turn the spotlight, as it were, to Christie Duncan. Now, Kristy is a very impressive woman whose bio I am sure you have all read or should read right away. I'm eager to hear from her, as are you, so I won't spend much of our time talking to her resume, except to highlight that she has dedicated her career to empowering the professional and personal development of women in payments and fintech. Kristy, we need so many more of you. Well, I doubt that's possible, but this is such crucial work, so I'm really glad you're at the helm. Will you tell us a little bit more about yourself and your organization, please?
Well, thanks for that kind introduction, Supriya, and thanks for including me in today's discussion. As founder and CEO of Women in Payments, I'm an engineer by training, a banker by trade, and a global payments geek, so it's my pleasure to be part of this conversation. I founded Women in Payments 10 years ago today. I can't believe it was 10 years ago, to create a platform for women's career development and a voice for gender parity in financial services. Today, we're the world's largest network of women payments professionals, and our global reach includes members from over 70 countries, working in banks, fintechs, payment networks, processors, and many other stakeholder groups.
Thank you, Kristy. That's certainly impressive. And sounds like it happened in short order. I mean, I know you're saying it, you can't believe it's been 10 years, but 10 years also seems to pass by so quickly. So the first question I'm going to pose to you is, to your mind, what are the key issues impacting and motivating Canadian consumers in the context of payments?
Well, thanks for that, Supriya. I think that's a really great question. And in the short to medium term, Canadian consumers, like many consumers around the world, are driven by the impacts of the global pandemic, of course, which has been the catalyst to a number of altered behaviors. And these include things like a global reduction in the use of cash and checks. And in Canada, cash dropped from 56% of people who use checks on a regular basis to 48%. And this is from the second half of 2019 to the second half of 2020, according to research by RFI. But a similar reduction from 9% of Canadians to 6% in the use of checks over the same period. RFI also found that 31% of Canadians expect to use less cash over the next 12 months, while 16% expect to increase their credit card use and 12% expect to use their debit card more. We're also seeing a huge uptick in the use of online commerce and as well as contactless payments. And Canada's a leader in the use of credit cards, where 69% of our population uses them on a regular basis, as well as e-transfers. Think Interac e-transfers, which are used by 39% of Canadians in a typical month, compared to just 2% of Canadians who only use cash in a typical month, again, according to research by RFI. So I think this is really interesting. But we're also seeing increased expectations for enhanced payment services, including embedded payments such as the Uber Eats experience or the Uber taxi experience, where the payment is simply embedded into the overall experience. Over the medium to long term, the market's undergoing changing competitive landscape driven by new market entrants, including both fintechs and the tech fins, as I call them, as well as neobanks and many other global players. Partnerships are the new name of the game, facilitated by API technology. And it's interesting to note that 31% of Canadians have used a fintech provider for financial services. And by those, I mean things like Wealthsimple or Mint, which are not banks and they're not regulated entities, but compared to a global average of 48%. So Canada's a little bit behind the global curve there. And when you look at China, 77% of their consumers, and in India, 94% of their consumers have used a fintech provider for financial services in the last month. And this is, again, according to research by RFI. So this changing landscape is bringing increased innovation, and together with that, increased competition for consumers. And from a payments perspective, Canadian consumers, I think, deserve to benefit from these amazing innovations. And these include things like product innovation, driven by both the market incumbents as well as the new players to the market. And I think we're going to see more of those new players joining the game in Canada because of this pending new Retail Payments Activities Act, the RPAA legislation. We'll also see reduced costs, as I believe, and time will tell, that banks will no longer have to bear the full cost of innovation thanks to API technology and partnerships with, or opportunities for partnerships with fintechs, which brings new product offerings to consumers. But also, I think we're going to see increased service levels. As we upgrade our payments infrastructure, it will facilitate new payments enhancements, such as increased data that goes along with our payments, that is facilitated by the real-time payment rail and also ISO 20022 enabled payments.
Interesting. Yeah. And in terms of, in terms of best practices that you see from other markets, I mean, can you outline some new and innovative payment solutions that can benefit Canadian consumers in addition to the ones you've just mentioned?
Yeah, well, this is where it gets really exciting. And I think Canada's got a great opportunity to learn from best practices in other markets, many of which are years ahead of us in this journey to modernizing our payments infrastructure. So some examples include and I'm sure Sue's going to have things to say about this, but the UK, which in 2008 launched its faster payments scheme, and it's now busy contemplating the successor to faster payments called the new payments architecture. So the UK is always pushing the envelope to provide state-of-the-art infrastructure upon which to innovate and drive competition. And some might call this innovation by regulation. And clearly, as leaders in that field, they're ahead of the pack, and the market is starting to see some really fantastic innovation there. Australia has introduced the new payments platform in 2018 and continues to build out overlay services to offer Australians new and exciting capabilities. In India, we've got the UPI, the Unified Payments Interface, which is a real-time payment system offering instant funds transfer between two bank accounts on a mobile platform. And they've already got 200 banks available on UPI with a monthly volume of over 2 billion transactions. And it is being used by many of the tech fins, the WhatsApp Pays, the Samsung Pays, the Google Pays, and Amazon Pays. So they're really, really pushing that innovation curve. I think also we're going to start seeing more in the area of ESG. So this environmental, social, governance qualities in the products and services that we use, including payments. And an example there is MasterCard, which has just announced its carbon calculator tool, which provides carbon footprint data on products to enable consumers to make informed purchasing decisions at the point of purchase. Looking ahead, I'm really excited what the future payments market can offer. Canadians, I think, will look forward to seeing new and flexible products and services that people in other markets already enjoy today. And most of these are based on the enshrined right for consumers to own their own data. And here's some examples. Real-time payments, whether it's payroll, loan funding, or bill payments, we can all enjoy the benefits of payments made in real time. Some examples are ride-sharing services, which in some countries, this service actually pays the drivers in real time after each ride. I think we're going to see more better information, richer data to identify payment sender details for international payments in particular, for both consumers and businesses. Contextual services, such as offers that are presented to you at a particular venue or conducting a particular transaction or in a certain geographic area. I like the idea of embedded payments facilitated by the Internet of Things, such as the connected car, which is connected to payment facilities at the place that you actually happen to be. So just drive the car through your car wash, your gas station, your drive-in movie, whatever that might be. And you don't need to be pulling out your payment card or your payment app. The connected fridge is one that many of us have been contemplating for a couple of years now. Or voice-activated payments, so that you can ask Alexa to pay your phone bill and more. And one more thing that I think we shouldn't lose sight of, but has come up even outside of the pandemic, and that's the concept of digital currencies, in particular central bank digital currencies. And I think we shouldn't overlook the potential impact that they will have on consumers as well as wholesale payment system users. A central bank digital currency can streamline transactions to facilitate commerce in new ways, both within Canada as well as for cross-border payments. Last but not least, we've got collaboration between the fintechs and tech fins and the banks. And a great example here is a recent announcement in the US by 8 US banks, which have teamed up with Google to launch mobile-first bank accounts within the Google Pay app. And this pairs Google's expertise in creating intuitive user experiences with the security of a bank to provide new budgeting and money management tools. I think that Canadian banks have a huge opportunity to monetize their payments infrastructure by partnering with these fintechs to offer new and exciting products and services, which can both enhance the customer experience and strengthen the customer relationship with their bank. The pandemic's been a huge accelerator for innovation in the market. We have benefited by increased contactless payment limits, digital onboarding, and a whole host of new innovations over the past year. Going forward, we get to step up on the innovation agenda to maintain our competitive edge on the global stage. To conclude, I believe that Canadians have a lot to look forward to as we build new infrastructure and embrace innovation across the payments landscape. And I'm really excited at what's coming down the pipe.
Thank you, Kristy. Yeah, I'll share with you that I'm quite excited as well, and I think, I think the potential to offer consumers the ability to make decisions in ways that help them achieve better financial outcomes is really is very, very, it's a stupendous opportunity. And I'll note that in our open banking submission as well, we welcomed a Canadian open banking solution that prioritizes the right of consumers to control their own financial data, which I think is a little bit of what you were alluding to there as well in terms of how they make decisions. Thank you. I'm going to welcome Richard to this conversation. So Richard Rémillard leads an Ottawa-based consulting firm that provides private sector, government, and trade association clients with creative, research-grounded solutions to business issues and public policies involving the Canadian financial services industry. Richard is also a member of the board of directors of the National Crowdfunding and FinTech Association of Canada. So my first question for you, Richard, is there are clear trends underway which are disrupting and transforming the global payments industry, some of which Kristy just alluded to as well, including the convergence of traditional and financial industries and the increased competition, customization of financial services for consumers. Can you share your perspective on this change with us, please?
Well, thank you very much, Supriya, and hello, fellow colleagues on the panel and everybody out there in internet land. I'd like to thank Supriya and the Financial Consumer Agency of Canada for including me in this panel, and a really exciting topic, I think, an important topic for Canadians and indeed for financial consumers around the world. I guess from my perspective, I'd like to start off talking about the big picture from 30,000 feet or 30,000 meters. Financial innovation is on fire. There's a West Coast in Canada firestorm, which is gobbling up incumbents, which is spreading rapidly, which is almost at the point of being uncontrollable. So by way of example, some data released by KPMG, the giant accounting firm, revealed that last year in 2020, pandemic land, there were $105 billion of US investments into fintech globally. That's enormous. That was mirrored pretty well proportionally by and large by what you see in Canada. And I'm speaking from both the wider fintech perspective and then the subset of paytechs within that, which are about 20-21% of the total number of firms, fintech firms, approximately 700, depending on what day you choose to put the pin in. Really speaking, what's happened in 2020 is that I think for planning purposes, the 3 to 5 year migration to new technologies, new methods of doing business, really got compressed into one. And as Kristy has said so eloquently, we're all going more online more of the time. Cash is turning into an antique form of transactions, and the pace of progress has picked up considerably. Stepping back, I think it's important to keep, again, to continue with my forest fire analogy, to stick with the view of what's going on and step back a bit. And I see 3 or 4 big factors in today's fintech financial services landscape. First of all, it's quite clear that both, insofar as financial services are concerned, traditional and non-traditional actors or players are getting involved. Think about Shopify, Google, Apple Pay, take your pick, PayPal. What you see happening is the breaking down in the 21st century of what had heretofore been a sacrosanct, almost iron wall, like a Berlin Wall, separating financial services business from other commercial and industrial businesses. And technology has started to erode that majorly. Google Pay, Apple Pay, and so on and so forth. And the boundaries and the challenges to regulators are all of a sudden a lot greater than they have been in the past, when it was easy to separate out Bank of Montreal from Canadian Pacific. Don't go there. But now with Google, who has a different business, getting into payments issues and other financial services issues, that's a lot more challenging. Secondly, what you could call mass customization is a feature of the world today. Increasingly, financial services is being split into verticals of various sorts. And what had been a whole of banking experience for customers, go into one branch, do your deposits, take out a loan, maybe invest and save, all in one place, one-stop shopping. And today what fintechs are doing, and tech fins, to use Christie's very felicitous term, is they're chopping that up like little bits of salami. And as a result, the one-size-fits-all financial institution of the past is finding it more and more difficult to survive and thrive and keep up the returns on equity that their shareholders require. So what you see happening, just as a kind of an offside, is that tech companies in public markets tend to be valued more highly than traditional companies, than traditional financial services companies. And you see the likes of traditional financial service providers rebranding themselves as tech companies with a financial services offering to get those valuations up higher. That's what Goldman Sachs is doing. Lastly, the implications of fintech and where the world is going in financial services, including payments, is 24/7, always on, transactions anywhere, anytime, from any device, 24/7. And this is radical. No longer do you have to worry. Remember banker's hours? I guess I'm betraying my age when I say, yes, banker's hours. I remember them, 9 to 3 with 2 hours off for lunch at noon. Ouch. Forget that. Gone. Boom. Finito. I think when you look at the fintechs and you look at financial services innovators generally, what they're trying to do, the business purpose, is trying to reduce what you could call the 3 C's of friction: cost, convenience, choice. And these are all pain points, to use a felicitous venture capital term. Pain points that are causing consumers pain. How do we get rid of those in terms of cost? The legacy computer systems of established financial institutions are heavy costs, heavy sunk costs. New providers don't face those same costs, and with competition, can pass on those savings to consumers. Choice. There's a world of choice now that didn't exist 15, 20 years ago. Well, in Canada, there's 6 big banks, and that was pretty well it. And now you can go to anywhere pretty well. That's not quite true, but it's tending to be true. I guess one remarkable feature, again, taking that 30,000 feet perspective of today's situation, is that when fintechs first began 15, 17 years ago, a lot of them adopted the Uber model. Let's burn it. Then we'll rebuild it and damn the consequences. And we'll do it all by ourselves. And there's been, I think, a subtle but real shift in the mentality of fintechs and in the shape of the financial services industry, at least in Canada, as established providers have come together with fintechs increasingly in a form of co-opetition, not full bore competition, not full bore collaboration, but somewhere in the middle, co-opetition. As a result, the former Uber or Lyft approach to regulation and to viewing regulators, I think, has pretty well been by and large abandoned by many in the fintech space right now. They realize, innovators and executives, that financial services is different from selling sausages. It comes with regulation. It comes with heavy regulation. And you have to deal with it. You can't just flaunt it. You can't just thumb your nose at it. You have to do it effectively. And in Canada, I think there, and it's some research to be checked, there's probably a greater amount of existing fintech collaboration with established financial services providers than you see in some other countries. And that has propelled the pace and the rate of financial innovation in the country.
Thank you, Richard. That's very informative. And I've made a couple of comments. I'm going to come back to you. I think I'm going to invite Sue into the conversation and come back to you shortly after. So I will, last but certainly not the least, welcome Sue Lewis. Sue serves, in addition to her work with the FCA that I mentioned at the outset, she serves as an independent board member of several organizations, such as the Fair Banking Foundation, a non-profit based in the UK that encourages and assists banking providers to improve the financial well-being of their consumers. Surviving Economic Abuse, the only UK charity dedicated to raising awareness of economic abuse, and Step Change Debt Charity, the UK's largest provider of free debt advice. So from that description, I think you'll have gathered that Sue is a consumer advocate, which is a voice we very much need in any discussion of innovation that is intended to benefit consumers first and foremost. So thank you for joining us, Sue, despite it being, I understand, a bank holiday in the UK and also wine o'clock, I imagine, but we're very glad to have you here with us. So my first question for you is, the UK, you know, as Kristy alluded to, and as we've all sort of read, is considered to be a leader in the payment space. And Canada, of course, can learn from the evolution of your payment industry and how you managed and continue to manage emerging consumer issues. So can you describe for us, payment trends and issues in the UK and how, to your mind, they are impacting financial consumers?
Great, thank you very much, Supriya. We're actually an hour off of wine o'clock, so I'm good. I'm good for an hour. Greetings, everyone, from actually a very sunny, beautiful day in London. Thank you for inviting me, and thanks to FCAC. It's good to be here and to hear the perspectives. So I left the UK Treasury about a decade ago. I thought I was going to retire, as Supriya's just set out. I did anything but retire. But pretty well everything I've done has been to look through that consumer lens at financial services issues. So I make no apologies for, again, very much looking through that lens. And I think one perspective is that the world is just getting faster. We need to make a lot of decisions. We don't have much information to do it, but we know we want to do it very, very quickly. So everything is happening fast. Thinking briefly about the UK, the COVID-19 pandemic, some of these trends are common to those in Canada. We've had a lot more online shopping, buy now, pay later. But interestingly, our group is younger even still. So last year, nearly half of 18 to 24-year-olds has used buy now, pay later. So very young age group, and that's a big concern. People are buying more financial products online. I mean, insurance has been online for a long time, but a lot of bored young people at home are buying investments online. They're buying Bitcoin, they're buying unregulated investments. And it's a little bit of a gamification. So they're seeing it almost as a game. And like Canada, we've got greater use of contactless payments. I should mention Amazon has just launched its first Just Walk Out store, first European Just Walk Out store just up the road from where I live. So you go in, you scan your credit card, then you literally just take everything off the shelf and walk out, and that's it. The queue for this store was round the block, of course, so it wasn't actually saving any time, but it's probably settled down a bit. There are cameras everywhere. So some of this has been necessary because stores have been closed and not many are taking cash. But this is an acceleration of existing trends. So Kristy mentioned open banking is well developed in the UK, though we've only got 3 million users so far, which sounds a lot, but with an adult population of 50 million or so, it's not the penetration is not that deep. So this was set up by our Competition and Markets Authority. So it's seen as a competition measure in the light of EU legislation. And what the CMA did was mandated the 9 largest UK banks to make available their customers' transaction data to third parties, with, of course, consumers controlling their own data. And the next step on from that is open finance, which will enable other data from other financial products, mortgages, loans, whatever, to be brought into a single point. Turning us now to instant payments. We've had those, as Kristy said, since 2008. So in some ways, yes, the UK is very advanced, but these advances bring a lot of innovation, but also consumer protection risks. So contactless payments, and we put our limit up to, they're great. They're quick. Speed is everything. So they're very quick. But people on low incomes who don't have much money, it's really hard to keep track of what you're spending with contactless payments. Unregulated credit products, which you talked about earlier, Supriya, leave consumers exposed to poor lending practices. We have very tight consumer protection regulation for credit products. In the UK, we've almost done away with payday loans. Almost, the regulation has priced them out of the market. So not surprisingly, the regulator is looking at buy now, pay later, and looking at all those online investments. So the UK conduct regulator last year spent the equivalent of over $1 million Canadian dollars putting out investment warnings on Google, while Google was taking in money for promoting the unregulated investments. So nice work for Google. But, you know, it's a sort of, and this sort of regulation of the internet, I don't want to get into, but it's something that's kind of hovers there in the background in all of this, I think. Instant payments, I don't think it's any exaggeration to say that they are a scammer's paradise. So UK consumers lost the equivalent of 780 million Canadian dollars to what we call authorised push payment fraud in 2019. So that means I authorised the payment. So I went online, I authorised the payment, but where it ended up was either a scammer or somebody else who, you know, was trying to get the money out of consumers. So because these payments, and scammers are very clever, I mean, they will ring up the number. If you see the number on the display, it will look like your bank's number, and they will say your account's been compromised, you need to move it to this account really quickly. That and not paying for goods that don't arrive. And people do not get their money back because they authorize the payment. And again, it's about this speed. You need to move this account now, or the tax man will say you'll go to court if you don't pay this tax bill now, and this is where you pay it. Lots of people realize they've been scammed, but they ring up their bank and the bank says you need to talk to the fraud department. They're only open on Tuesdays from 9 in the morning till 1 in the afternoon. I exaggerate, but not that much. So we've got 2 voluntary countermeasures: confirmation of payee, so the consumer can check that they are sending, that the name on the account they're sending to and the account details match what they think, where they think they're going, which isn't that much use if it's a scam, and contingent reimbursement. And this is a voluntary move that undertakes to repay the customer if they've taken reasonable steps to satisfy themselves the transaction is genuine. And this code also puts the onus on banks to satisfy themselves that the accounts are not being set up for criminal purposes. Even those banks that have signed up to this code don't pay up. I think of that $780 million equivalent, I think people got maybe half the money back, maybe less. But what happens is that customers have to take their case to the financial ombudsman before they can get any redress, and that should not happen. So in a world where my credit card was suspended when I shopped in a store where I don't usually shop, this was a big nuisance, but I kind of got where they were coming from. So it ought to be easy for banks to use data analytics to monitor the receiving bank and whether that account is legitimate or not.
Okay, I'm going to ask a quick question, and I'm going to invite all panelists to comment on it. And I'm going to club a question that arises from something you were saying, Sue, and also from some of the things that Richard was saying. And the question is, to going back to the original framing of this discussion as well, is it possible to reconcile effective innovation with consumer protection? And specifically in the context of Canada, what challenges do we face as we continue to modernize payment systems while also protecting consumers and merchants? And I'm going to switch up the order a little bit. Kristy, let's hear from you if you have thoughts on that and I'll ask everybody if you could stay under about 1.5 minutes in your response. And then we have a few audience questions I'd like to get to in the 10 minutes that we have remaining. Okay, Kristy, shoot.
So in terms of consumer protections, this is a huge, huge issue, as Sue has rightly pointed out, and we do need to address it, I think. And there are multiple levels of doing that. Of course, we can look at the payee bank account name, who is receiving this payment, which may or may not be helpful. But I think there's also technology that's either currently in place or pending. And I've seen it in the markets. There's a company called BioCatch, I think, are based in Israel, and they look at keystrokes and how do people normally enter data on their computers versus while they're often being scammed, if they're being coached by a fraudster on the other end of the line saying, okay, now just type in this, password and this thing. And that's another way that we can catch some of this. So I think we can use the technology to help us catch this kind of fraud. And Honestly, we're never going to catch all of the fraud. We like to think we can, but it seems to be a never-ending circle. I think the other thing is I'd like to ensure that we don't sleepwalk into this new environment of faster, amazing payments without keeping in mind that some people can't necessarily access that. So financial inclusion is something we need to also keep in the back of our minds, perhaps not even the back. And I'm happy to talk about that more as well.
Thank you, Kristy. Sue, what are your thoughts?
Yes, so I mean, I sounded very negative in my opening remarks, but I want to just say that there is a lot of really good innovation in open banking that can increase inclusion. And kind of my main message here is that consumer protection needs to be built in, not bolt on. And by that, I mean, so faster payments. So we've now got to the point where we've had a lot of fraud. And actually, yes, we could use tech to find it, but the banks don't seem to be interested in doing that because they don't face a penalty. So we could use a lot of tech. So, but by built in, I mean, rather than adding a few kind of voluntary things on the back end of a process, sort of 13 years after it was introduced, actually, open banking was set up with the objective that retail and SME customers should benefit from innovation. And what that's meant is that the standards and the protocols have been developed with full consumer representation every step of the way. So I'm paying particular attention to things like inclusion and behavioral biases, coming back to this speed thing. So as well as technical standards, firms are expected to adopt consumer experience guidelines, which ensure kind of a smooth and a safe experience that takes account of what real consumers want and how they behave. So I think that is absolutely my key message, is built in, not bolt on.
Thank you very much. I will say we very much agree. Richard, I'm going to pose the question to you, but I just want to add a thing, which is, you know, you were talking about the 3 or 4 C's, and I'll say, you know, please respond to this question about sort of, you know, innovation and how do we build in financial protection, but also I read this one time and I found it very powerful, and it said consumer confidence cannot be sacrificed to convenience. And so I wonder if you'll address that as well in your 2 minutes.
Okay, thank you. Where to start? I guess I'm pessimistic about the future of cohabitation between innovation and regulation. I look at Canada's history, and so far regulation has won to the detriment of innovation. It's a bigger problem in Canada. We have trouble getting big projects off the ground. Period. Full stop. Think about pipelines across the country or down to the US. Pretty well impossible. If you look in the financial sector, history since 2008 has been littered with the corpses of financial innovations killed, stopped, stillborn by regulators. Good case in point, quite frankly, is equity crowdfunding, where there's a patchwork of crazy provincial regulations that serve absolutely no purpose. And so volumes of equity and crowdfunding are pretty well zero. In another sphere, we don't have yet, unlike the US or the UK, a common financial securities commission that's national. Killed, gone, abandoned. Where did it go? I think the genesis of this in financial services stems really from our experience as a country in 2008, 2009. A lot of financial services, established financial services corporations, banks, lending institutions, bit the dust in the UK and the US. We kind of avoided that through some judicious measures. But the takeaway from regulators was financial innovation of the sort that led to alt subprime mortgages, exotic derivatives, financial innovations in the US and UK were to be avoided here. So regulation works, it protects the system, and innovation is a threat. In fact, innovation is a 4-letter word. So in response to your second question, and keeping within as much as I can the 2-minute limit, I think the foundation for any successful financial services business of any sort, traditional, fintech, techfin, any kind, is simply trust. And whichever type of company, type of provider can succeed in the future in establishing that trust is going to emerge a competitive winner. And I think the jury's out, to be frank. I don't think we know yet. Today's market darling is at hostage, is at risk to tomorrow's data breach and infecting millions of consumers. And given the fact that we're in a new financial world where the traditional metrics for systemic stability, namely capital adequacy and liquidity, that the usual financial institutions, Schedule A1 banks, Schedule 1 banks, rather, in Canada, have adhered to, it gets layered on with another area of risk called digital security. And it's not clear yet who the winners are going to be. Huge amounts of money are flowing into cybersecurity, data privacy, but it's not clear yet. It's not.
Okay. Yes, thank you. Sorry to interrupt you there, Richard. We have only a couple minutes left.
More than 2 minutes.
Yeah, but thank you. I appreciate those thoughts. I will say, if you look at analyses of the impact of regulation on innovation, it is not really actually the case that regulation prevents innovation. In fact, clear regulation in many instances can advance innovation. And to your point about trust and building that trust for the consumers, because really, let's be candid, if we build this amazing thing and nobody uses it, then it's quite pointless. So we, in terms of building that trust in consumers, Canadians trust the banking industry as it is currently, and that is because there are levels of protection that are embedded into that framework, not bolted on, but built in, as Sue was alluding to. And so seems to me the best way to perpetuate that trust to new entrants in the market is that we extend those built-in regulations equally to anybody providing financial services to consumers. Now, I assume, you'll all have thoughts on this. We don't actually have time, but that's a sign of a good panel. If I leave with something you don't get to respond very much to, but I'm going to give the very last word to Sue. Would you like to say anything at the very end that Canada needs to learn from you? And if not, I'm happy to wrap up, but you have 30 seconds.
Just involve consumers in what you do.
Brilliant. Yes, we are totally, I will say for myself, Sue, I am very much in agreement. Thank you, everyone, for a informative discussion. We said a lot about things happening very fast. And as you can see, our time has gone by very fast as well. I look forward to continuing this discussion with you in different fora and learning more about other jurisdictions and making sure that consumers are protected while we provide them with all the various potentials of these new payment systems, and many of which Kristy alluded to, some of which Richard alluded to as well. So thank you very much, and hopefully talk again soon.
Thanks, everybody. Thanks.
Thank you very much. Have a good day, everyone. Thank you.